Hi guys, welcome to this Moneycontrol live stream. You're watching Morning Trade with me, Nandita Khemka. Over the next 30 minutes, lots of cues to digest, given the fact that Infosys' sharp cut in guidance, could roil the IT pack in today's session. And of course, lots of earnings to watch out for. Reliance Industries, JSW Steel, Vedanta, and a whole lot of other counters. So we'll be talking about all that. And of course, we'll also be getting all your stock-related queries answered by a technical expert on the show. So if you have any queries, as usual, send them in to us on our YouTube feed and we will have them addressed. But before we do all that, let's take a look at the top headlines at this hour. Wall Street closes mixed. The Dow Jones rallies for 9th straight day while Netflix and Tesla correct over 8% on disappointing earnings, pulling the Nasdaq sharply lower. Asian markets trade largely lower while GIFT Nifty is also hinting at a negative start for the Indian market. Infosys delivers a steady and in-line first quarter but sharply cuts its revenue growth guidance for FY24 to 1 to 3.5% from 4 to 7% earlier. The Infi ADR falls more than 8% overnight. Meanwhile, HUL's first quarter numbers miss estimates even as it posts a bump up in gross margins. Volumes, of course, were disappointing and management points to improvement in consumer sentiment but says that competitive intensity is set to increase. A mixed bag is expected from Reliance Industries in the first quarter. Refining business is likely to be under pressure while the consumer business could deliver a steady performance. Jio's subscriber addition is expected to remain strong. And among other earnings, HDFC Life, UltraTech Cement and JSW Steel from the Nifty will be reporting first quarter numbers in an earnings-heavy day today. Also look out for numbers from Vedanta, Hindustan Zinc and Ashok Leyland. Well, let's then, without any delay, bring on board our first guest for today. Mayuresh Joshi of William O'Neill India is joining in this morning to talk about, the market setup, the IT index after Infosys' guidance cut. Good morning, Mayuresh. Good to have you on the show as usual. Let's first talk about the market, given the fact that, yesterday, I think towards the end of the session, we were on the edge of our seats waiting for the 20,000 mark. But looks like, the IT pack could play spoil sport for the bulls on Dalal Street. What's your own view?
Good morning, Nandita. Pleasure to be on your show, as always. Two things, absolutely. I think with the howler that Infosys has probably given, the IT index will be under pressure in today's trade. And therefore, I think the mark that we were all waiting for, 20K, might get delayed by a few days. But I think there are other supporting factors for the index. Reliance and Jio Financial Services, where the demerger news is out and where the discovery price is much higher than market expectations. And a lot of banking stocks probably holding out in terms of earnings estimates as well. But yes, I think the IT index is definitely going to be a drag, looking at how Infosys has probably performed on guidance that has probably been given out.
Right. When you look at Infosys' numbers, of course, CC revenue growth has outpaced peers. But, looking at the management commentary, how would you sum it up? They have said that there is, of course, a delay in project start dates, cut in or, consumer discretionary spends as well. But, the commentary across the board from other companies have also been pretty cautious. Even then, you look at HCL Tech, they have maintained their guidance. Wipro's guidance was better than expectations. But looking at the sharp cut at Infosys' guidance, I mean, do you think it's a company-specific issue? Because the industry as a whole has said that there is, of course, delay in spending and, there is weakness in demand. But look at the way Infosys has cut its guidance. It's come as a nasty surprise.
Oh, absolutely. You're bang on the spot, Nandita. I think it's probably looking like an Infosys-centric issue at this point of time. And if you go through management con calls and transcripts for most companies, whether it's large caps or mid caps, I think the point that you've pertinently raised, decision-making has slowed down. The timely deal ramp-ups are going to take some time. I think that's the key takeaway. But none of the companies have probably either revised their constant currency guidance or even revised their EBIT margin guidance downwards. Let's remember that Q1 is expected to be a very, very soft quarter. A lot of wage hikes, salary increments come through, and therefore margins do come under pressure. And the underpinning aspect in terms of decision-making slowing down has been obvious for the sector as a whole. Now, for Infosys in general, I think the three key takeaways. One, I think mega deals are being pushed out and delayed for a longer time interval. The second aspect in terms of what the management clearly mentioned, significant cut in discretionary spend across sectors, whether it's BFSI, retail, manufacturing, and even the volume from mega deals are slowing down because of macro challenges. Other companies are working out in the same environment, which again points out to two issues. A, it is probably an Infosys-centric issue at this point of time. But if Infosys is working in the same environment like the others are at this point of time, are the other companies too optimistic at this point of time? And does Q3, Q4, which is the decision-making quarter for most sectors in US and Europe, would actually indicate some amount of slowness and therefore some change in guidance that is probably given by the end of the third quarter for most other IT companies is a question mark that will remain unanswered till we get the next quarter number. So I think Infosys' numbers is asking a lot more for the sector.
Right. Mayuresh, if you look at the stock of Infosys, I think over the last 1 month, it has run up sharply 10 to 11%. But of course, I think we are expecting a 10% downtick on the share price today itself. But, the street view had largely changed from, very cautious to a little optimistic after, HCL Tech and Wipro started reporting earnings. But do you think that would change now, given the fact that we've obviously seen a lot of brokerages also cut earnings estimates for Infosys today, this morning? So what do you think? Do you think the buy on dip strategy should continue for some of these IT names? And even if it should, do you think Infosys should be avoided at this juncture?
So Infosys will definitely be an underperformer, Nandita, and you're absolutely right. I think the large expectation looking at other IT companies' results, as we were just discussing, was that the upper end of the guidance that Infosys is probably looking at might get reduced and the EBIT margin guidance would get maintained. Now, even if you look at the new guidance that they've given, 1 to 3.5%, even the higher end of the guidance is 0.5% lower than the lower end of the guidance that was probably given earlier. So that's a significant revenue cut that you're probably seeing. So the softness is probably expected for the sector looking at commentaries. But I think the kind of sharp cuts that Infosys is probably given, I think the earnings estimates for this year are definitely going to get drilled down quite significantly. And the recovery probably gets pushed to the second half of the next financial year. So I think, yes, Infosys will be a clear underperformer. And it probably drags the entire index down to a large extent because of the uncertainties that the other companies might face, as I just mentioned, in the succeeding few quarters, if they may. And therefore, I think you have to be a little bit more cautious looking at the index at this point of time. Infosys, definitely an underperformer going forward. Other companies might relatively hold up. A few companies like HCL Tech Mahindra from the large cap space are close to their pivots or above the pivots on our Marketsmith India ideology. But one should probably be a little bit more sanguine when it comes to aggressive investing for the sectors.
Right. One last question to you, Mayuresh. A lot of mid-cap earnings, IT earnings have also trickled in. I think Persistent was a miss on that front. But, vis-a-vis last quarter, what is the trend you're spotting when it comes to mid-cap earnings this time around, and what should one do with some of these mid-cap IT stocks now?
So to a large extent, Persistent, even Coforge, Nandita, was a miss because the expectations were a little bit on the higher side when it came to EBIT around 12.5%, 13%. They did around 10.5%, 10.8% in terms of EBIT margins. Obviously, salary hikes was a big component in terms of the margin and the performance. But to a large extent, I think the mega deals that we were just speaking about for large cap IT companies, for mid cap IT companies, deal sizes typically at 1 million, 2 million, 5 million are still persisting because I think a lot of businesses in the mid cap space or the mid tier space in the US and the European zone are still continuing with their orders. But going with the trend, the large element of decision-making slowing down is also very, very common for mid-cap IT companies. They have run up quite significantly. So even from a valuation perspective or even from the key pivot levels that we track at Marketsmith India, they're way above key pivot levels at late stage basis, which basically mean that if a pullback probably happens within the space, I think it'll be a healthier sign. And if they consolidate at lower levels, stock like a Persistent, LTI, Mindtree, as an example, I think those stocks need to cool off a little bit before any fresh investments can be made. So I think some consolidation and a time-wise correction is needed for the mid-cap IT sector as well.
Right. Well, that's the view then. With that, Mayuresh, thanks a lot for taking out time and joining in this morning. It's always a pleasure chatting with you.
Thank you so much, Nandita. Pleasure to be on your show as well.
Yeah. Let's also bring on board our next guest for today, Raja Venkatraman of Neotrader joining in this morning. Good morning, Raja. 20,000 was like literally there yesterday, but of course it was, we ended up missing that mark, and today looks like the IT pack will play spoilsport. So what is the kind of support level you'll be watching out for on the index today?
Yeah, so as we all have been expecting a healthy correction for buying into the markets. So I believe that this is what we are getting it now. And what I truly believe is, yes, the SGX is showing a very sharp dip. And those are the dips we should be looking into. And I feel that as long as the lower levels around 19,700 continues to hold, the market should definitely be in the bullish territory. Now, to ensure that the market is there in the bullish territory, let's see what has to happen. First of all, we need the strong movement which we have seen in Bank Nifty over the last 2 days is sustaining. Especially yesterday on the expiry day, Bank Nifty was actually lying around the lower levels, and we saw a very sharp move of around 500 points since the morning. And the second half of the day was a very strong one. Now, for this momentum to continue, so those levels around 45. 500 to 45,700 will once again offer a very good support. So the market continues to be on a buy on dip mode, and yes, the overseas cues are definitely dictating the terms here. So if you see here that while the results, they were having a continuous trot of strong closing, and we also replicated the same. Now there is movement in the IT space on the downside, and that is going to impact the opening. So I truly believe that today's opening is going to be impacted. There is going to be a dip emerging in the indices, and those are the dips to buy into, because I feel that the positive trend is expected to continue. And now the higher levels in Nifty is around 20,100, and Bank Nifty is at 46,600 by the end of this expiry. So overall momentum is positive, and there are good stocks which are coming out with their Q1 numbers as well. So all this is going to dictate the trends. So one should not immediately slip into a negative bias because of just one day of correction. And please note that this is due to the overseas cues. Nothing has happened on the domestic front. So all is well as of now. So I truly believe that this is a dip we should buy into.
All right, maybe the weakness in the IT pack would only, give rise to a healthy correction, which could be bought into. That's the view coming in from Raja. But let's also focus in on some earnings that, will be trickling in today. Of course, big boy Reliance Industries will be reporting its earnings. Net profit is seen at somewhere around 16,995 crore rupees or thereabouts. Net sales, seen at somewhere around 2.14 lakh crore rupees. That's, of course, on a consolidated basis. Steady growth in consumer business expected, and that may offset some bit of a decline that the O2C business could see. In terms of what to expect, of course, it's a mixed bag that one should be expecting from Reliance Industries. Consumer businesses, as I mentioned, will provide strength to the first quarter performance. The dip in refining margins will be offset by higher petchem margins for this company. And, Jio subscriber additions are likely to be strong in the first quarter. In fact, we could expect a 25% QOQ growth in the subscriber addition where Jio is concerned. And, when it comes to Reliance Retail, the revenues are expected to grow around 20% on a YOY basis. Now, if you look at the shares of Reliance, of course, they have hit a fresh 52-week high very recently. So, of course, we will have to see how the numbers pan out, and of course, that will be watched out for on Monday. And on Monday, we'll have to watch out for a lot of other earnings as well, given the fact that, banking names like ICICI Bank, Kotak Bank and Yes Bank will be reporting their earnings over the weekend. But let me also get back to Raja then. Raja, what are your thoughts on, the IT pack? I was just talking to Mayuresh about it. But, on the charts, Infosys, the ADR was down somewhere around 9%. I think that's the biggest fall in the last 3 months. That was when, the company reported weakish set of numbers in Q4 as well. In fact, it was the weakest in Q4 among its peers. But this morning, on the charts, Infosys, how much of a downside would you be expecting?
Yeah, Infosys has a history of dictating the market opening, and now over the last 2 quarters, we have seen it dictating or disturbing the trends to the downside. So again, Infi is going to produce a downward gap, and the gap is going to be a significant one. So it had recovered from the last fall. I'm sure that even this fall it will there will be some bit of participation there. People will start going short in IT. Yes, IT continues to be a buy on dip and sell on rally approach, and one should not get too excited in the IT space. So I truly believe that whatever IT names are throwing up right now, if one is having some decent profits, one should book and then look at dips to buy into. So now, first up, Nifty IT has had a very strong run, and I truly believe the IT space is going to slip into a range, because once the result season is over, there is it only IT sector moves only ahead of the result season, and once the results are done, basically they are slipping into a congestion. So this is the trend in IT. So if you are looking at IT from an investment perspective, then I would definitely not wager any names in this space. If you are looking at it from a trading perspective, say on an intraday or on a 2 to 3 days basis, then IT is a good space to look into.
All right, that's the view on the IT pack. But let's also talk about HUL. This company, of course, reported its numbers post markets yesterday. Unexciting, first quarter performance, given the fact that volume growth has missed estimates. In fact, even EBITDA margin for that matter has missed estimates, even though gross margins have seen some bit of an uptick. Brokerages are cautious on this stock. In fact, I think Jefferies has downgraded the stock, after the first quarter numbers. How is it looking on the charts now, Raja?
Yeah, HUL somehow has not been able to capitalize on the consumption theme, and in the FMCG space, this has been one of the poor performer, and it looks like ITC is definitely giving HUL a run for its money, and you can see that since July last year, the prices have been stuck around 2700, and they have really not been able to move above that. So what I would like to see is a strong move about 2700 for the HUL to perform. So at the current juncture, it's at a very important stage. So now if there is a positive trigger in HUL, then this could really trigger some sharp upside. So one should keep it on the track, but one should not be looking to trade or participate in it at the moment.
All right, that's the view then on HUL. Of course, ITC has an edge over HUL. That's the view. Let's take up some viewer queries then on that note. The first one is coming in from Akash Kumar Gupta, wants to know your thoughts on Maruti Suzuki. Stock is somewhere around 9,700 or thereabouts. 52-week high is somewhere around 10,000 bucks. But how would you advise investors to position themselves when it comes to a Maruti ahead of earnings?
Yeah, Maruti has had a very strong run. We have seen even the entire auto pack has had a very significant run in the last few months actually. And now, yes, you will experience certain profit booking out here, considering that the market itself is showing a deep gash at the start of the day. So this will invite some correction here. So I am looking at lower levels around closer towards 9,000 is where I would actually look to buy into Maruti, because right now the trends are extremely stretched. So I will wait for a reaction.
All right, that's the view on Maruti. Hope that answers your query. But let's also take up a query on IRFC. This one is coming in from Chinmay Salunke and wants to know your thoughts on that. I think the stock has been stuck in a range over the last 1 month or so. It is up merely 1% or thereabouts. Should one look at IRFC when it comes to the some of these railway stocks?
Yeah, the thing is that the railway had a good move when the announcement was made by the government. After that, pretty much the stocks have actually slipped into some sort of consolidation. So I would not, that same momentum, if you are expecting right now, it is not going to happen. It's going to happen much slower. So one needs to have an outlook of around next maybe 6 to 9 months, because that's when you will see a traction. So upward direction towards the region of 45 to 48 is possible within the next 6 to 8 months.
All right, that's the view on IRFC and the entire railway pack. But let's also take up a query on Bajaj Finance. This one is coming in from Karan Suhanandani, and he wants to know your thoughts on this stock. Of course, this stock, I think it's holding on. Last 1 month, it has gained somewhere around 6% or thereabouts. Would you say that the underperformance that it saw last year has completely reversed? And, of course, there is stiff competition ahead, given the fact that, we will be seeing Geo Financial, list on the bourses as well. But, how should one play Bajaj Finance now, given the fact that it has, kind of stabilized a bit after the correction that it had seen in the earlier part of the year?
Yeah. So amongst the NBFCs, Bajaj Finance has really done remarkably well, and it's definitely a leader in terms of giving the right kind of direction to the entire industry. And if you see from April onwards, it has nearly given more than around 40% jump from the lower levels in April. So in the last 3 months, it has come up by 40%, which is quite significant considering the entire move. So now, yes, there could be some profit booking, but one should look to buy it on every dip. So the dip levels which I am expecting here is closer to the region of 7,000 to 7,000, around 7,200 is where dip, if it occurs, and that should be considered. So buy on every dip is what I would suggest in Bajaj Finance. Bajaj Finance is a very good investment stock for those who are having the adequate capital.
All right, that's the call on Bajaj Finance then. Let's take up a query on SBI Card as well. This one is coming in from Kumaran. Wants to know your target on the stock. I mean, he's not really mentioned a time period, but over the last 1 month, the stock has been under pressure, 4% down or thereabouts. In fact, I think it has just come off its, I think it's somewhere around 850 or thereabouts. Yeah, that's correct. What are the kind of targets you'd be watching out for? Would it be on the upside going forward, or do you see some more downside coming in on this counter?
Yeah, what I have noticed is that SBI Cards has really not been able to perform. It displays some periodic rebounds from lower levels, but then the stock continues to remain under pressure. Now again, once again in the region of 925 to 940, it will experience some supply. So if you are invested, look for a targets around 925 to 940 as a immediate target zone, and if you want further, then it has to really cross above these zones, because at these juncture there are a lot of selling points out there, and the steep fall which has occurred from these levels just indicate that once the prices reach those zones, you will experience some supply. Now, if you are going to freshly invest into this stock, it's an avoid.
All right, I hope that answers your query. Let's also take up a query on South Indian Bank. Anandan has written in, wants to know your thoughts. Of course, the stock is down 8%. It reported numbers as well. How should one play this one after the numbers?
Yeah, the numbers have not been great, and this is shown in the price action. And what I truly believe is, if one needs to wait for a 2-digit stock to really multiply, you need to invest sufficient amount of capital, and the overall trends in this stock is quite good. But if you're looking to make some money out of this, then you'll have to wait for some time, because the trends look to be reversing to the downside.
All right, this kind of wraps up our query segment for today. I'm afraid we are running out of time, but of course, if we couldn't take up your query, please be patient. We'll take it up in the next show. But Raja, before I let you go, what are you recommending for our viewers this morning?
Yeah, I would like to go in with a long recommendation. Yes, despite market being on the downside, I would look to go ahead with a long recommendation. And these are some stocks which I would like to recommend. One is Grasim. Right, Grasim is a buy at current levels, and stop loss at 1795 for a target to 1865, 1880, and buy in McDowell. The results were quite good, and buy around 978 with a stop at 970 for a target of 990 and 995.
All right, that's those are the calls coming in for this morning. But we also had queries on Grasim on our feed. Vivek Kurup wanted to know the target. I hope that, kind of answers your query, Vivek. But with that, Raja, thanks a lot for taking out time and joining in this morning, and obviously addressing all our viewer queries as well. It's always a pleasure chatting with you.
Thank you.
Well, with that, we've come to the end of this edition of Morning Trade. But of course, I'll be getting you a chat on how the HUL numbers have fared with Mangalam at 11 a.m. Don't forget to tune in for that. But for now, of course, coming up next is Opening Bell. So stay tuned for that as well. And from me and the entire team, thanks a lot for watching. Have a profitable trading day ahead.